Hello, Andrew Myron from Intuitive Finance. Well, interest-only lending is in the news again. Is it really that bad? Well, there's a couple of points to note here. If you've got interest-only lending on assets that we would deem as bad assets, so if you've bought a car and you're not paying it off or things like that, absolutely it's bad. If it's for an investment, an A-grade quality investment, then it can be good because it'll maximise your tax deductibility and hopefully the asset grows. If it's for something like your house, however, I'm an advocate for actually paying off your home. See, what a home loan isn't bad debt, in my opinion. It's what I would call necessary debt. Necessary debt is something that we need to take on to buy a home. Most homeowners in Australia couldn't buy their home without a home loan. So that's a necessary debt. Now, you don't get a tax deduction, but nor do you pay anything on your home when you sell it and make a gain. So I think you should be paying principal and interest off your home. If you've got an investment or two along the side of that and you're paying interest only on that, that makes perfect sense to me. That's just normal tax planning and tax structuring to be allocating all your principal and interest, all your principal reductions off your primary home and keeping the tax deductible assets and loans at a premium. Now, if you've got everything on interest only, however, I would say that's not a great thing for you to have. What happens when it all comes due? What happens if it all comes due at the same time? Are you really going to be able to start to afford to pay principal and interest off all your debts? So I think there really needs to be a balance. At the end of the day, there's only two ways to repay your debt, and that's either from your personal exertion income and what you earn every week, fortnight or month, or from selling assets. And the idea of acquiring them is not for the long-term sale, it's to hold. You'll make money buying quality assets by holding them. So that's my thoughts. Interest-only lending's in the news because by world standards, we're at a very high rate. So world standards says 30% of all borrowings are at interest only, whereas in Australia we're at around 40%. And we're going to start to see the regulators make some changes there. So watch this space, should be some interesting times.